So at Lucas Fox, we deal with a lot of international clients, and our advice to them is always the same. Depending on what their central bank of their home country is actually doing with regards to interest rates. Let's roll, baby. What we will see now that interest rates have decreased, or lower interest rates typically, is investors looking at getting a decent rate of return on their capital. The expectation is to go into Q4 2024 and possibly well into 2025 further rate cuts.
Hi, my name is Eugenia and I work in the marketing team of Lucas Fox, and today we're going to be discussing how interest rates influence every investment we make. Today we are having expert insights from Mo Bad, the director of the Barcelona Office at Lucas Fox. Interest rates might sound like a dry topic, but they play a crucial role in the world of finance and investing. When the Federal Reserve or other central banks decide to change interest rates, it's more than just an announcement. It's a move that impacts everything from mortgages and loans to stock, bonds, and yes, your real estate investments. Changes in interest rates ripple across the entire economy, affecting inflation, currency values, and even real estate. Understanding these effects can help you make smarter investment decisions, whether you're buying your first home or expanding your portfolio. So let's look at this topic in further detail. How do interest rates directly impact real estate investments?
So typically what happens is that as the interest rate increases, property prices will start to either slow down or possibly even stagnate. But what we have seen recently is the ECB has just cut interest rates to obviously stimulate the housing market. So what we now expect to see going into certainly Q4 2024 and into 2025 is high levels of demand and more property transactions happening.
How do low interest rates benefit real estate investors?
What we will see now that interest rates have decreased, or lower interest rates typically, is investors looking at getting a decent rate of return on their capital. So we will now see investors applying for mortgages, looking at acquiring debts, getting into property transactions, and leveraging their overall portfolio to acquire more assets.
Can high interest rates ever be good for real estate investment?
I think so. The main reason being is that essentially what any solid housing market needs is sustainability and good term growth, which means that if interest rates do rise, they tend to maybe cool off a booming market, which means that you're not heading towards a bubble or a property crash, what we have seen in the past in various different countries and markets. So it's not necessarily a bad thing, providing you're getting healthy growth on a year-to-year basis.
How do interest rate changes affect rental properties?
So if the interest rates decrease, what you will see is a high level of sales transactions happening, which will mean more people look to shift from the rental market into actually owning their own home and purchasing. And vice versa, on the flip side, if interest rates are higher, based on the way that a bank does an affordability test, less people can actually afford to get the financing, and therefore they're kind of forced into the rental market, and that's how it works.
How do interest rates affect international real estate investors?
So at Lucas Fox, we deal with a lot of international clients, and our advice to them is always the same. Depending on what their central bank of their home country is actually doing with regards to interest rates, a good example is the Federal Reserve are looking at cutting their base rate. That will lead to a weaker dollar, and that will therefore then lead to a weaker purchasing power when that client moves the money from dollars into euros. So our advice is always, despite maybe not having found the perfect home or the perfect property to acquire, it's always good practice to change already a bulk of their money into euros, and that's a good way of sort of hedging against currency risk.
As an industry expert, Mo, what do you think will happen with interest rates going forward, and why has the ECB taken this decision?
Well, we've recently seen the ECB just cut the interest rates down to 3.5%. That's off the back of them feeling a lot more comfortable with their previous inflationary pressure. They've got it down a little bit more comfortable to the 2%, which is the target. The expectation is to go into Q4 2024 and possibly well into 2025 further rate cuts. But a lot of that is also going to depend on how transactions develop and how inflation also looks like in terms of the levels going into 2025. At Lucas Fox, we're closely monitoring what will happen at the next monetary meeting scheduled for November, as again, further rate cuts are expected. So we'll keep a very, very close eye on how things develop, and then obviously advise our clients accordingly.
What are you currently seeing in the Barcelona market in the segment where Lucas Fox operates, especially regarding price evolution?
So we're seeing prices have steadily increased year on year now, and what we are seeing is excess level of demand in comparison to the supply. I think that there is definitely lack of good quality product and properties coming onto the market on a week by week, month by month basis. And I think that will actually continue going into 2025 as well. Obviously with the recent interest rate cuts, which will no doubt lead to more mortgage applications happening, we will see definitely a shift towards a seller's market. We'll see more buyers coming into the marketplace and fighting and competing for good quality properties. And that's what the expectation, I think, is from all of the key players in the segment.
What is the best practice for securing the best mortgage deal?
In my professional opinion, I think it's always a good practice to work with a mortgage broker rather than an individual bank, just because that way they've got access to multiple different banks rather than one specific lender, who sometimes they'll try and obviously sell you a lot more of their own in-house products to bring the overall interest rate down. So my advice is always, before we start looking for properties, to really well define what is the client's budget. Let's get an affordability test done from the mortgage broker or the banks that they're operating with. And sometimes what happens with clients is they get so attached to what the interest rate is doing, and the property becomes the secondary aspect to the search. And what I always say is that you marry the property, but you date the interest rate. And I think it's important that if you find the perfect property, get it locked in, get the property off the market, and get it secured for yourself.
And last question, how does Lucas Fox support its clients throughout the financing process?
So financing process would be get them in touch with a mortgage broker early and make an introduction, because you could go onto Google and find yourself thousands of brokers, but in reality you only want to work with one or two real trusted partners, which is what we have in-house. Open the lines of communication with those guys really early, get them over all of the documents that they will need for the financial assessment, and let's see what offers they can come back with from 2 or 3 really good quality lenders, and then basically we can start the property search and start advising clients on the perfect property, whether that be investment or the final property for them to use, guide themselves through the entire process.